Welcome to TradeTheNBI.com. This is John. This report is for the 27th, and well, Friday we saw a nice little dip that was bought back up as usual. We've been seeing a continuation of rising short interest going all the way through here. We spiked back above the 13.5 here on the orange. Again, that poses risks, but we've seen some larger dips in between. The fact, though, that the red DOC has been riding high and a continued rise in the shakeout has prevented any significant decline. We can also see now that we've reached an extreme oversold here of the short-term buyers. However, in this zone, it's a little bit more precarious than if we were in the above negative 13.5 here. So I think that some downward pressures are still existing. We just gotten a lot of support every time we've reached the ABM levels, and we continue to rise through that. So all in all, not a horrible thing. The NASDAQ has suffered a little bit more extreme, and that's just because it's been a little bit more overbought within this. It still has been an impressive run overall. You can see, though, getting very close to a transition. Once the red DOC moves below the 7.5, I think you would begin to see a bit more carry through on any downward. And again, this all gets back to expectations versus the realities of things. Market players still believe that there will be tax relief. There's already been regulation relief, so there's been significant movement that way, and there's also been a significant sentiment move. So those do have impact, and they will play. So while some people think that all of this is nonsense and basically super froth, it's not necessarily the case. Those are tangible things that will have an impact, particularly over time. And some of this is pre-buying that time. Now the euro, again, central banks keep coming in at the same spot. The headwinds in Europe still continue to grow, particularly as French elections move closer. I think we just saw Denmark asking, I don't know if it's a rhetorical question or if they're really checking it out to see if they can separate from the euro. So Euro has potential of having some real issues. We don't even have to get into the issues banking in Italy and things like that. This saw a dramatic move for bonds that the Fed appears to be stuck at this particular point, unable to do anything. That's an interesting one. This is a surprise move to see so much of a dramatic jump in Treasury. It's an expectation that there won't be any impact on rates, which hard to believe when you're seeing CPI and those numbers starting to move to the upside. Some of that pressure is taken off, of course, as long as oil remains nowhere flat at this particular point. I think the headwinds are still there for oil. Supply is just too easy. U.S. has become over 1 million barrel a day exporter now. That's dramatic. It's not going to change the fact, and this is going to be interesting when to see TLT rise. At the same time, gold still continuing to push higher as we've expected, all the way down from the 109 range. Gold still looks to be the answer at this particular point for most people, particularly given the currency fluctuations. We do note that it is a bit overbought at this particular point, but I don't see that as being overly dramatic. Slight backfills going in here. So here's what we had. We had this my 2360 pivot point that we've been gyrating around here. We've been seeing some accumulation. We had a dip below, took out the lows, wiped out a bunch of stops, and then started its climb back up. Ended up with a nice little turnaround point at that level, which was slightly below. And as we started moving across on the Friday, I said that on our Skype chat that when you get this kind of situation, when there's no breakdown to the lows, that you're going to get late Friday buyers, and that's exactly what happened. And look what they did. They brought it right back up over it and neutralized the general effect. This also gave Trump, I think, a record for the Dow and number of record highs for a given month from being president. But this all began way back at right after the election in November, because the expectations completely flipped. We already had a bias to the upside at that point. It has only grown, and people who think that things are extraordinarily overbought maybe don't understand the concept. When money keeps coming in, you're not overbought, you're just continuing to climb. Two different things, and I think a lot of people confuse it. And that's mostly because they're oscillators that just show it that way. We went to an extreme, parabolic in some cases. We see this all the time, even on our 5K charts. But as new buyers come in, that overbought is dissipated, and this is the unfortunate nature of oscillators, and that don't necessarily reflect these kinds of things. So as long as new money keeps coming in, you're not overbought, just rising with the tide. That's where the current things are. Indicators will be set for Tuesday's release, which will be the 28th, and that way you'll be all set for Wednesday, which will be the 1st. So we'll have all those put together, and a couple little adjustments that are being made to the paint bars will be included in those. Some of it's subtle right now, but it's just a lot of language been added through it. So it's all good stuff, though. As always, though, trade well. We'll talk again later.